You know what they say, you win some and wow, you lose some. Earlier today, I went into a call credit spread on the spider, on the itsy bitsy spider, SPY, ticker symbol SP to the Y. And it was just over 407 when I put that trade on. And I did a credit spread at 409 sold, and I bought back the 410. So I'm in the money here. I have already closed it though. I just wanted to show you what that loss looks like. Took the big L, but I did get out of it right before it got into the 409s, which was into the money. And it hasn't done much except wobble in and out of the money since, and then mostly in the money. So let's take a look at that loss. Head on over here to the Robinhood, pull up SPY, and we'll go down and take a look at the loss. Put the big L on the forehead is what we had to do. Let's show more of that history. Okay, so when we put that trade on this morning, it was 3 hours ago. Go ahead and open up. You can do it. Open up. There it is. So at 10:12 a.m. Central Time, we put on this trade, which was the 409. We sold the 40. Whoa! We lost it. We sold the 409 call, right? 5 contracts, and then we bought the 410s as our downside protection, and we put $40 into our pocket, which, that was a pretty good premium at the time. But if you did watch that video, I discussed how I normally don't take that percentage of a trade because it was at about 85% probability of profit. Normally, I like to be in the 90s on these credit spreads. And I'm like, hey, roll the dice, take your chances. Well, I took my chances, and then I whop right to the gut. Got sucker punched by the market today. So we collected 40 here, and then I bought it back. I bought it closed it out, and really you sell and you buy to close it out. And that was at what time? 12:35 p.m. Central Standard Time. And I bought the 409 call closed, and then I sold the 410 to close that side of the trade as well. And that cost me, so this is a minus, this is a debit of 170. So you take the 170 minus the 40 I collected, and I lost $130. But if I would have just let it ride longer, I could have easily lost all $500 of the collateral that I put up. But that's why I do it live. That's why I try to record these and put these videos out on the YouTube as quickly as possible so that you can see all the mistakes that I make along the way as well. So that's what we have on the SPY, losing $130 today. And the problem with that, let's go, I think I have, no, I don't, but I bet I can find it, can't I? Is it in its own sheet? Yeah, it's in its own sheet. So I don't have it up right now. I'll pull that up later. I'll update my SPY trade sheet for you, the spreadsheet, and share it with you to show you how, you lose $130. That can knock out 3, 4, 5 days worth of trades. That's the problem. That is the problem with any of the trading, especially on the credit spreads. It is definitely a great opportunity to trade credit spreads because it is built for small accounts. You can have nice little returns per day if you're using these 0-day to expiration trades on a small balance account. But the risk is, and always will be, there. That's what we have going for us. And SPY is currently at 409.21. So I'm glad I did close it when I did, because it would cost me a lot more if I were to close it right now, since it's into the money. I was also looking at Big Mo, looking at Altria. It is down today. 44.38 to me is a bargain, even though our friends over here at Yahoo Finance say it's overvalued. What do our friends over at Alpha Spreads say about Big Mo at its current price? Money, mo problems. Not true. always remember money rule number one: money solves all of your money problems. Yes, it does. Words to live by. There's Altria Group. Let's see what they say at Alpha Spread regarding its value. They feel it is currently 27% undervalued. And you know what they do? You know what they do? They like to pay a big dividend out because, literally and figuratively, smoking is a dying art. It's not funny. Didn't your dad die from that? Yes, he did. Well, he died from heart disease, but basically brought on by his chronic smoking since he was 14 years old. So, hey, look at that. Altria hints at non-nicotine products like caffeine and cannabis, an investor event. They probably do need to spread their wings just a little bit, but don't bail on nicotine or tobacco yet. It's kind of like bailing on gasoline and oil. Just not a thing yet. So let's look at their dividend here on the Altria Big Mo. Currently at 8.46%. And at its price today, so it's at $3.76 as far as its yearly payout, $3.76, and then we divide it by what's it currently selling at right now, $44.37. And we get an 847. So it ticks up just a little bit based on today's trading. So if we were to look at an 847 instead of 846, if we look at the dividend yield here, 4-year average, see they have an average of 755. And as of this moment today, based on this price, it is at 847. The problem with Mo and Altria Group in my twisted mind is that you never really can collect a whole lot of premium trading Altria. Yes, it is very nice and you can see my average cost on my 700 shares, $46.34. So if I bought some right now, I'd bring my average cost down. Do I have any positions? I do. I have 2 strategies, but they're both call positions. We've got a 47.50 and another 47.50, and they're dated out. So you have to go out pretty far just to get some decent premium on them. And, that just adds to our already attractive dividend that Altria Group pays me. But I was thinking, is it worth making a trade on it right now just to see if there's any put action? So if I sold some puts, let's just take a look. Let's go 15 days out and see if there's any action whatsoever. I mean, it's close. There's a little bit of action here. 44. Would I own Altria at 44 all day, every day? So do you want to make a trade? Or do you want to look out 3 weeks? Let's go 3 weeks just to see. So there's a 40 cent on the 44, right? What does it do 3 weeks out? We go to 63 on the 44. We got the 63. And but what is the math? Let's do math just for fun. So that's 63.63 divided by 44 equals that equation divided by 22 times 365, and that would be a 23.7% return. Okay, so I wrote that down on my little pad next to me here. It's my trading pad, not my training pad like you'd put a puppy on. It's my trading pad. Let's go back up though, back that up a week, back it up. So it'd be at the 15 day. So we go down to 40 cents, but what does that do annualized? Because, time, what it does, it keeps on slipping. So 40 divided by 44, there's our equation, but then we divide it by the 15 days, divided by 15 equals that, multiplied by 365 equals that. So it's a real close number, but the 22-day wins because it's at 23.7%, and the 15-day, let me make notes of that as well because we'll look another week out as well. So the 15-day is at 22.1. So the 22-day wins that battle of attrition. But let's go another week out just to see. So let's go 29 days out, which essentially becomes 1 month. We go 29 days out, look at the same strike, 44. So let's pull that So it just clicked down. So it's 74 cents divided by 44. There's our equation. Now we divide it by the 29 days, divided by 29. And then we multiply it by the 365 annualized to end up with the 21.1. So out of the three, so that's 29 days. Out of the three, the 22-day trade wins the battle of the bulge. So let's go to the 22-day trade. That's April 28th. Let's click through the 44 and let's just put one on for fun. Well, can we get another dollar? We could at least get another dollar, maybe two. We'll go for the 64. Let's try it out here on $4,400 collateral, and then we'll redo the math. Okay, so now we have 64. We have $64 divided by 4,400 collateral, right? And then it's 22 days out. So we divide that by the 22. And then we multiply it to annualize it by the 365. And now we're up to 24.1 because we were able to collect one more penny on per share on that trade on the 100 shares for the one contract of the put, the cash secured put. So now we're at an annualized of 24.1. And I did tell you, obviously, it didn't work out on the Costco. Wow, if you watch that video. But I'm trying to hit 20% plus annualized on these types of trades. And then over time, we'll be able to get our real number. So we got this trade on the board, Big Mo, and it is a cash secured put at $44 bills because it's not a very active as far as the price doesn't move a whole lot, but it's low from what I've been watching it for the last 3-4 months. 44.40, pretty low. So we'll keep an eye on that trade. Hopefully that continues to be in our favor. Thank you so much for joining me and taking a look at that SPY loss that we had today. I was able to limit the damage. Net loss on that trade, $130. So we'll just keep our chin up, keep moving ahead, and I will see you. I'll see you in the next video.